Mira Business FM.
It's the morning drive. My name's Tim Elliott. It's Mira Business FM. Dubai's office market has delivered its strongest performance in more than a decade. Sales values more than doubling, 13.1 billion dirhams in 2025. Transactions up 53%. Off-plan sales skyrocketing nearly 700%. And rents climbed sharply across prime districts like DIFC, Dubai International Financial Centre, and downtown Dubai. Zacky Sajjad is the Director of Business Development and Client Relations at Cavendish Maxwell. Zacky, good to see you.
Good morning. Thanks for having me.
You're very welcome. Good to have you back. So let's try and break down what's driving demand, where investors are focusing attention, what to expect from the market in 2026 this morning a little bit. The first thing, though, is I want to take in the headline again. Dubai office sales values doubled. Excellent. Strongest annual performance since 2014. It's great news. Transactions up 53%. That's impressive. But the most dramatic figure is this off-plan sales figure, surging 700%. So what's fueling this shift? Because that's pretty dramatic.
Well, it all boils down to supply and demand, really. If you want to look at the moment, obviously the residential sector has had a lot of spotlight, and correctly so, over the last few years. Huge volumes of transactions, population growth, which is part of one of the drivers for that. So one of the spillovers to that is then the office segment. If you've got more and more people coming to live here, more and more people need jobs, they need places to work. And so offices, logistics, and some of the other categories, asset classes, you start to see this kind of sort of demand coming through, and this is what's happened here. Now, the sort of lack of supply, essentially in the market, is what has driven this off-plan surge, especially in that kind of prime Grade A office space. And I think if you look at what's planned and what's under construction, we are still experiencing some pain points, just like the resi sector, where the expected handovers haven't quite reached where we expected them to, say, for 2025. The same in the office segment. So what we expected to have handed over fell short by some way, and as a result, that has also driven the demand even higher.
Supporting the market,
exactly,
I suppose, really. Okay. I love that, the resi sector, by the way. I'm going to employ that. Is that what you do in the office?
Yeah.
Resi. It's not the commie sector.
No, just
just the resi sector. I mean, the thing is that the figures kind of do more justice than the percentage growth. So 700% is huge, but when you look at off-plan sales values, 4.6 billion compared to 700 million in 2024. But what's interesting is that, as you say there, it's about half the original projected pipeline, I think I'm right. So supply is still very limited, and going forward will remain so for a while.
Yeah, I think we saw about 87,000 square metres handed over last year, but projected about 224,000 square metres was projected.
Right.
So again, this year the projections are 300,000 square metres to be handed over, but I don't think we will probably reach that. I think we expect that to fall short, probably half of that, I would imagine, and that's nothing to do with it. It's just a simple, as with any development, real estate development, these things take time. Sure. There's often delays, and that's through a number of factors. There's also the amount of launches that have happened and the amount of development going on across the city. There is I would say, a lack of contractors in the market to deliver this. So this is probably one of the factors as well. So if you look at what the total supply is across the city, I mean, you're probably about 9.4 million square meters in office supply across the whole of Dubai, and what was handed over last year was probably just over 1%. Of that. So, so when we look at it, we had a few post-pandemic. During that, this work from home and this is going to be the new norm. We're actually probably seeing a flip on that. We're seeing more and more people coming into the office. I speak for myself. We only have a 1 day a week work from home policy. I think this is there's been a push here to go back into to the office, and I think certain industries require that. There's younger people coming into employment that are starting their careers. They need to be surrounded by more experienced people, so to learn and to get that sort of knowledge and the experience that they need.
Isn't it amazing how quickly that changed, though?
Yeah.
Because it's 5 years, just over 5 years, really, since we were all at home and everybody was, this is kind of new, this is kind of good.
Yeah.
And now...
Yeah, but I think also there's a lot of... I actually think a lot of the attention on wellness and well-being, I don't think working from home necessarily is just to digress slightly here, but I don't think that's very healthy. I think you end up working a lot more. You end up sat in front of your computer for longer periods. Whereas that separation between work and home, I think, is probably quite healthy. Even if it does involve a commute that is double what it once was. We could put on your favourite podcast and listen to that.
Not that was a topic of discussion this morning for half an hour.
Yeah.
No, but you're right. But it's an interesting point, though, that you make, and it kind of does relate to lots of the things you do, because these are things that you have to take into account, of course. I guess. Yeah. Okay. Sales values doubling to 13.1 billion. That's the big figure at the top of your report, obviously. Yeah. Transactions hitting a 10-year high, just over that, actually. What are the key drivers behind the performance? Because it's pretty exceptional.
Look, I think when you when you see what various asset classes have been experiencing, and obviously the big headline is the residential sector. The commercial office space. We're hitting record highs, but we're talking about 4,600 transactions, in 2025 versus 205,000 residential transactions. So we have to put it into context. Now that you're never going to see the appetite for commercial offices as you would for residential. There's always going to be an imbalance there, but that's what's driving it. More and more people are coming. If you look at what's happened to the rents in prime districts, rents have increased over 30% year on year for commercial offices. Even in, I would say probably the less kind of prime, but still good locations, they've increased 20 to 27%, across the city. So if your rents are increasing and you're a business owner and you've been here quite some time, like yourself, like myself, you probably think actually maybe it's about time to just buy the office. We're sat on an asset now. Yeah, so I think there is that thinking. I can think off the top of my head of at least half a dozen friends that I know who have their own businesses who in the last 12 to 18 months have bought an office, not necessarily for themselves to occupy. They are aware that they may outgrow that, but they're thinking at least it's an asset that the business now holds.
That's an interesting shift as well, isn't it? Yeah. I mean, there are a number of reasons for that, and it's it's confidence in it's the path forward in terms of I can realise this asset at some point. People are starting to stay. We've seen population growth explode. Lots of different reasons for that.
And even there's also sort of facilities now being made available for commercial real estate from the banks. So the mortgages, commercial mortgages are now sort of widely available for people, where perhaps it wouldn't have been so much, a few years ago. So I think all these factors, geopolitical factors, macroeconomic factors, the kind of the rise of DIFC, ADGM, all these factors play into this surge that we're seeing.
So on the face of it, it was, pretty simply put, just a really busy year, really good year. So office transactions up 53%. So growth isn't just about higher prices, more deals are happening.
Yeah.
So my takeaway is that more business activity, that's expanding. There have to be new companies entering the market. Maybe existing firms are looking at upgrading or expanding their space. Are those all reasonable assumptions?
Yeah, absolutely. If you look at Dubai Chambers, I mean, they're posting record numbers in terms of company formations, company setups, business groups that are being set up. If you look at any of the sort of service providers out there, corporate service providers, they're all posting record numbers. Obviously, it's been well documented about the number of ultra high net worths and high net worths that are coming here. Now, okay, these sort of quite select groups, they come here. They may be coming here because they're seeing it as a tax haven, but inevitably, once they're here, they're not in that position for no reason. So they're then looking, okay, well, maybe we'll start establishing some sort of family office or some sort of enterprise, that they're looking to do. So there's all these factors. I think it's almost like this perfect storm. And I think what Dubai has done and the UAE has done wonderfully, exceptionally, is really putting itself on the global map. It wasn't that long ago where I think everybody kind of heard of Dubai and Abu Dhabi, but they wouldn't have necessarily put it on the same conversation as, say, London, Paris, New York, Hong Kong, Singapore. Whereas now I think globally it's very much sort of being discussed in that sense. And, whether it's the office segment, as I said, we've already talked about the resi segment, but if you look at the hospitality sector as well, that's also, performing outstandingly at the last sort of couple of years. So I would say that it's all these kind of factors that are kind of coming in to play. You now have golden visas. You now have, which are very easy to get a hold of. As long as you satisfy the criteria, you can set up a company within a week, often within a couple of days. Now, I mean, those of us that have been here sort of 20 years plus, we remember how that process once was. Setting up a bank account now can take hours, rather than,
That's the big change.
Yeah.
I think. Yeah,
so all these,
right.
I think all these factors, and I think, as human beings, I remember I was involved in a big development project early on in my career, and I remember there was a guy on site, sort of a wise old man. He said, "Watch how the lazy guy does it and learn, because he'll find the quickest, easiest route." So and I think that's in human nature, right? We want to find things. We want to find the easy way, and I think Dubai has done a wonderful job of making it just very simple, very easy to come and set up your business and to start an enterprise, and success is celebrated.
I think that's a good point. I'm a firm believer in make your life as easy as you can. Maybe not the lazy route, but make it as simple as you can.
Yeah,
I think that's a good parallel. I mean, it wasn't that long ago when I remember saying to somebody, "I'm going to Abu Dhabi." Wales, and well, no, but now you say Abu Dhabi to somebody, and they know exactly where they are. So, no, it's a fair point. I want to go back to stock for a second, Zacky. With supplies come in a long way below projections for 2025.
Yeah.
How critical is that shortage in the real grade A stock when it comes to pushing, rents?
Yeah, I mean, that's why we're seeing sort of 33% increases in downtown, 35% increases in rents in DIFC, right, because there is this constrained supply. Now, obviously, we've got DIFC 2.0, which the first phase of that should be handed over fairly soon. Mm-hmm. So you're going to see more, and it's much needed. By the way, this sort of supply coming to the market. I think also, you look at other areas, be that Dubai Hills, Business Bay, thriving areas, increases of 20-25% in office rents. If you look at on the off-plan side, interestingly, the top location for off-plan was Motor City. So what does that tell you about perhaps travel times and commute distances and what's around Motor City? So I think that's probably why you're seeing some of that. So I think that there is a constraint at the moment, and the rents are reflecting that. If you're sat on a legacy rent, it now is certainly not the time to be moving. If you've got that sort of 5-year lease sort of locked in and you're into that. However, if you're coming towards the end of that 5-year lease, as we've experienced with some of our clients that we've been discussing with, it is challenging because now the market has drastically changed, and what you were once looking to rent for could have increased, astronomically, 2-3-fold if you're coming to the end of a 5-year a 5-year lease.
Yeah. So if you're locked into a legacy rent, don't move, and if you're growing, just work the desks as best you can.
Well, I think this is part of what is happening. I mean, certainly we've seen this with a lot of clients. They're looking to acquire an office, and they're saying, right, well, at least whether I occupy that myself or whether I rent that is subsidising what I'm having to pay for any additional space. Or it's I can put a proportion of the staff there. Other people can rotate. We can have this kind of flexi working environment. There's a lot of things that are being looked at the moment in the market, and it's the top areas, JLT, even Barsha Heights. You're seeing some 20+% rent increases.
What about Business Bay? How?
Yeah, so you're about 25 to 27%.
Really?
In Business Bay as an average, and even there, Business Bay is the only location which makes the top 5 on transactions for both ready units and off plan. So if you look at what's happening, if you go into Business Bay now, there is a huge wave of activity in Business Bay from not just the commercial office sector, but also on the residential sector, and most of those vacant plots are now under construction, or if not built and handed over. So
I still always get lost in Business Bay.
Yeah.
I think it's me, but it's just one of those. But you're right. It's exponential, isn't it?
Yeah.
Something else, and really, this is a growth story at the heart of everything in your report, isn't it? As it kind of is year on year in the UAE. Nearly half the transactions for offices were between 1,000 and 2,000 square feet. So what does that tell you about buyers in the market?
I mean, I think this is, as we're seeing volumes increase, those volumes will be led at the more affordable end of the segment. So, just like if you compare it to the residential sector, we can all talk about these wonderful kind of, $100 million, sort of 300 million plus dirham transactions, but they make up a small fraction of the transactions.
It's just great headlines.
On the value, they make an impact, but in terms of the volume, they make little impact. The volume play is in the apartments and the kind of, more affordable segments. And the same thing for commercial offices, right? So for people to be buying whole floors, to be buying these larger office spaces, you're talking people with quite deep pockets, essentially. And so for the vast majority of businesses within the UAE, and this is just not a UAE, it's a global trend, they're small and medium enterprises, right? So that's where the growth is. So that's where we're seeing the most appetite. And so therefore, it's that 1,000 to 2,000 square foot sweet spot. Nearly half of the transactions are in that sort of size of office space.
Couple more questions. We've got 2-3 minutes left. If we've got something like 300,000 square meters projected for delivery, this year. Historically lower completion rates, as you've pointed out. So I'm guessing you expect supply is still going to be tight. Yeah,
I think it will. I think we'll probably end up at somewhere between 90 and 140,000 square meters being handed over this year. So I think we'll fall well below the projections. I think as a result, that's going to put pressure on rents, and occupiers are going to have those challenges that they're going to face with it's definitely a landlord-friendly market at the moment. So that's what I would imagine more of the same. And I think there is still enough appetite for more launches in the office kind of segment.
Okay, final question is kind of the look ahead question. So I think I always do this to you. It's like the crystal ball question. I apologise, but I'm interested just really in your thoughts. Do you anticipate continued price growth, or could we see some kind of stabilisation this year?
I think we're probably going to see a little bit of price growth in certain areas. I think other areas are definitely getting to the point where, it's the rate per square foot is comparable with other kind of global markets.
Mm-hmm.
So they've probably, got close to, where the ceiling would be for that. But ultimately, it's always boils down to supply and demand. If the fundamentals of population growth keep increasing, if we're getting more visitors than ever before, if more businesses are being set up than ever before, then the demand is going to push for these price increases.
A good place to be, really.
It is. We're very lucky.
It's not terrible. Zacky Sajjad is the Director of Business Development, Client Relations at the Chartered Surveyor Property Consultancy. How do I describe that?
Yeah, that's exactly it. Chartered
right?
Surveyors and Property Consultancy, Cavendish Maxwell.
All right, then. Good to talk to you, Zacky. Thanks for coming again.
Thank you. Thank you very much.
Appreciate it. This is Mira Business FM.